I've seen a lot of working capital, equipment loans. I'm working with a gentleman that owns a Firehouse Subs out here, and he wanted to buy 2 fryers, and he bought the fryers, and we're giving him the loans. That way he can replenish his savings and stuff like that. Equipment loans. If you're looking to kind of get by throughout the month and pay your payroll or your expenses, meanwhile you have maybe net 30 or.
Now, what are the interest rates on a credit line? Are they more than credit cards, less than credit cards? Are they similar to like a home equity line of credit? What do those look like?
They're fairly similar to the home equity line of credit. I would say somewhere around the same, if not maybe depending on your credit, right? But let's say top tier, which is 730 or higher, line of credit is at right now currently at 8.75. It is a variable rate. It does mirror the prime rate index, which currently is at 7.25. And then on top of that, there's a margin, 1.5% margin, which is what we charge for that line of credit.
That's how much you guys make, basically.
Right.
Got it. Okay. Now, how is a credit line different than a term loan?
Term loan pretty much is 5-year period. You borrow it as you're paying it back. You can't use that line that money anymore. And at the end of the 5 years, you know you're going to pay it back, and there's no balloon payment. You don't owe anything on at the very end if, let's say, you don't pay off everything you owe. It's what's called fully amortized, right?
Got it.
All the payments are made to where you're going to pay it at the end of the term, 5 years.
So basically, like, let's say I get a lump sum of $100,000. I got 5 years to pay that, and that's amortized, almost like a car loan, basically, where I'm paying both principal and interest, basically. Back
Exactly.
to at the end of 5 years, it should be paid back in full, basically. Now, what do the interest rates look like there? And then also, what are the limits as well, too?
So the limits are pretty much the same as the line of credits. Up to 500,000, anything over 50,000, we need collateral, property, investments, commercial, what have you. Pretty much the same. With the term loan, the rates are, I want to say they're at like 7.75, so about 1% less.
Okay, and what are those based off? I know that on the credit line, it was based on prime. Are these based on prime as well, too? Just a smaller margin?
Correct. Yeah. So based off prime, just a smaller margin, because we're looking to it's just a fully amortized loan where we know you're going to pay it back in X amount of years versus the possibility of there being a balloon payment at the end of the term for the line of credit.
Got it. And let me ask you this: on a fixed loan, or it sounds like the term loans are fixed and the credit lines are variable, meaning on the term loan, it's a fixed rate, basically.
No, great question. They're both variable. They're both a variable rate, and they both mirror the prime rate index. The margin with us is fixed. So it just depends on whether the prime rate is going up or down. Currently, obviously, as I'm sure you're aware, rates are on the downward trend now because they've been crazy high, right? So it is a variable rate technically, but in the interest rate climate we're in, we don't really foresee them to go up. We actually foresee them to go down. But again, that's the $1 million question, right? Where are rates going?
So basically, in both scenarios, your payment changes every single month, basically.
It can potentially, if and only if the feds change the rate.
Okay, and what about credit cards? What do those look like as well, too? What are the limits on credit cards, and how do the rates work on business credit cards?
The rates with us, we give a intro rate for the first 6 months of 5.99%, and then we're looking at 17.99% thereafter. Limits range from 25 to 50 to 100,000.
And do those require personal guarantee as well, too?
Correct. Yes.
What are most people using business credit for, or the type of businesses that you guys are helping?
I've seen a lot of working capital, equipment loans. So I'm working with a gentleman that owns a Firehouse Subs out here, and he wanted to buy 2 fryers, and he bought the fryers, and we're giving him the loans. That way he can replenish his savings and stuff like that. Equipment loans. If you're looking to kind of get by throughout the month and pay your payroll or your expenses. Meanwhile, you have maybe net 30 or accounts receivables essentially, right? Or just growth if you're already established and you want to buy another or kind of expand on that business.
Got it. What's the process look like to qualify for any of these products?
So depending on the product, right? Auto loans and credit cards, you have to be in business for 1 year. The term loans and line of credits, you have to be in business for 2 years. But then we get pretty involved if, let's say, it has to go through underwriting. We're looking at 2 years tax returns, personal and business, profit and loss statements, and then like 3 months bank statements or what have you. But once that's received, I usually ask about 2 business days for me to do the what's called a cash flow analysis to see how liquid your business is, how much it cash flows, and then we send it off to underwriting. Underwriting usually asks about a day for them to turn around and give a decision, or if they have any questions, they'd ask then.
For those people that don't understand a cash flow analysis, can you go a little bit deeper in that?
Yeah, yeah. So it just calculates it's based off the tax returns. It's when you file your 1120, 1120S or what have you, your business returns, depending on what entity you have or what have you. We're looking at the gross profits, the cost of goods sold, which is what costs you to do business, and then any other expenses like interest expense, depreciation, and all that good stuff. So it's just kind of an overall look as to see what kind of money you really bring in net at the end of the month or the end of the year, to see if it's a sustainable business, meaning it's actually making money and you're cash flowing each month.
In what situations should somebody be getting a line of credit versus a term loan and vice versa?